Hello everyone. Hi, my name is Professor Bhavin Gandhi and today I am here to discuss your Jan 25 FM paper. So first of all, let me congratulate you. The paper was extremely manageable, no lengthy questions, no out of the book concepts. Everything is from your study module or else from the material which we have studied. So many students have messaged me saying that "Ke sir, the paper really went very well and I'm very happy with that. So I'll not waste much of your time because today is your, today it was your last paper and you all must be willing to relax and enjoy. Okay. So very quickly, it's going to be a very short video. I'll discuss the MCQs with you. And I'm so glad that many students have solved entire MCQs correct. Okay. So the scope of getting exemption in your paper 6 has increased tremendously because of the level of questions which has been asked and the way you all have practiced. So it was a very wonderful paper. Okay. So let us quickly start with case scenario 1. Okay. Do let me know in comments also whether you all have got your MCQs correct or not, or what the mistakes you all have made and so on. Okay. So see, your case scenario 1, this was about your capital structure, our textbook question. Okay. And it was also very commonly found in study module. In your case scenario 1, this is the existing capital structure. We have equity share capital, we have 15% debentures. Okay. And then the funds required was rupees 100 lakhs. And basically, this after expansion, your EBIT is also given to you as 76 lakhs. The tax rate is 30%. And we have two financial plans. In the first plan, there is debt equity mixture. And in the second plan, there is equity, debt, and preferential mixture. Okay. So we usually solve it in the class by preparing first summary of financial plan. So how much ever possible, I've solved it for you. Okay. And the number of equity shares is 11.2 lakhs and 10.4 lakhs. Okay. So all these things I had also discussed in the revision series videos, which I had uploaded for 1.5 days before the examination as well. So even if you'll have gone through those revision videos also, so that would also have helped you to crack the entire 50 marks paper very easily. Okay. And please let me know in the comment box as well whether y'all were able to approach that, and whether you all had seen the revision videos or not, and how much helpful it was for you. Okay. So basically, we had number of equity shares of 11.2 lakhs and your 10.4 lakhs, old plus new equity shares. Okay. And I have prepared this income statement. Now, many students make a mistake here. I hope you all have not made it, where they only consider interest for the new financial plan. I hope the interest you have considered is because in the existing capital structure also there was some loan. So there is interest, old interest as well as new interest based on the plan 1 and plan 2. Okay. And then there was EBT from which we subtracted tax. We got the NPAT and we also got the EPS. I hope you all have taken number of equity shares existing as well as your fresh issue both. Okay. So based on the EPS, they had asked you the first question, and what would be the EPS of plan 1 and plan 2? So the answer which comes is 3.9 and 4.1. So it is there on your screen. Okay. So it is 3.9 and 4.1. So it was actually your option C. Then also at the same time, what would be the MPS? So your MPS was at a PE ratio of 12 and 15. The MPS is coming as 46.8 and 61.5, which is there here. Okay. As so for second part, your option number A. And then for the third part, financial break-even point, uh, it is 13 lakh 60,000. And don't forget, there was preference dividend as well. Here also, you have to take interest of old and new both. And your option is D. So I hope you all have taken your financial break-even point, your option D, which is 13 lakh 60 and 15 lakh 8,571. Okay. Wherever you have confusion, you can just pause the video. Okay. And just reconfirm your answers. Okay. Question number 4 for indifference point. Actually, I have solved the entire indifference point and the calculation was a little bit lengthy. So I just thought that I'll solve it and I'll show it to you. So it was coming as 34 lakh 40,000. Okay. Your indifference point, and which was your option B as well. Okay. Then we have option then we have the fifth part, and in the fifth part, your EPS at that indifference point, if you solve it by preparing the income statement, the answer is 1.3. Okay, obviously B and C, B and D could not have been possible. So amongst A and C, if you solve it, you get option A. So if you have got all the MCQs correct and if your 10 marks are secured, so please write down in the comment box whether you all have got 10 on 10 or not. Okay. Then your case 2. So case 2 was about your basic ratio analysis and very easy ratios for you to calculate. Okay. So there, the first thing was you had to calculate the amount of stock and your amount of debtors. So I've solved this for you. Sales minus GP, that actually gives you a COGS. So your stock turnover ratio, based on that, your stock is coming as 20 lakhs and your debtors is coming also as 20 lakhs. So hence your sixth option A should be taken into consideration. For your next question, slightly tricky. Your current assets, current liabilities, we have to calculate it. We have the current ratio available and we also have the quick ratio available. So what I've done is, with the help of current ratio, I have established that current assets is 1.5 current liabilities and we have your quick ratio available. So I've substituted my current assets as 1.5 current liabilities there, and based on that, I've got my current liabilities as 40 lakhs and my current assets as 60 lakhs, which is nothing but your option C. Okay. And your question number 8, which actually deals with what should be your amount of working capital after considering the provision for contingencies. So that was a safety margin which needed to be added. So slightly tricky question would have been, if 20% is on total working capital, then it would have been 80 plus 20, and that would have been given to you as total margin, as your total working capital would have been 100 lakhs. Would have been 100, but here we simply have to add 20% to the working capital amount. So which is CA minus CL, that will actually give you your working capital. Simply add 20% to it. So in that case, the option is coming as B. So we have option B as 60 lakhs. Okay. So these were your MCQs. Do let me know how your MCQs were. Okay. Now part 2, section A, your first question. Slightly lengthy, but this was regarding our cash budget. No difficult transactions at all. And we had to prepare the cash budget for starting from July. Okay. And for 3 months starting from July. So July, August, September. So I hope you all have done it in the tabular way. And particulars, July, August, September, and opening balance at receipts less payments, that would have given you the closing balance. And requisite transaction needs to be posted. Sales minus GP would have been given you your COGS, and this COGS was actually paid in the next month. Okay. So make sure that your creditors, payment to creditors, is going to be for the next month, and the collection period was 2 months. Okay. So basically July's payment was supposed to be done in August and July's sales receipts were done in the month of September. Okay. So that's how you have to do the calculations. And here the tricky part was only regarding how do we keep the balances. Again, this was there in the study module as well, and we have also done this in our regular as well as your fast track course, where we have to take into consideration your short-term loan and short-term invest and your investments as well. So if the balance is less than 1 lakh, what we need to do is we have to take borrowing. So if suppose in the month of July, example, if it is coming as 70,000, so we have to take the short-term borrowing of 30,000. And if suppose it exceeds 2 lakhs, then what we need to do is we have to invest it. So if it is 3 lakh rupees, then 1 lakh rupees needs to be invested. Okay. So this was the only adjustment which we had to make. And then the balance would have been carried forward in the next month. Okay. So in the class, we have done it by taking opening plus receipts less payment gives you closing. And we used to add the borrowings and subtract the investments. And ultimately this would have been given you balance, which is transferred to the next month. Okay. So that's how the calculation would have been done. And 1B, oh my God, leverages. I always tell this to my students, this is our textbook question. And I think this is the leverages first question which we solve, whether it is fast track or regular. Okay. And the very first question is actually asked in the examination for 5 marks. Extremely easy question. We have to calculate EPS, OL, FL, and CL. Okay. And this was regarding your leverages. Also 1C, okay, this was your dividend decision question. Again, nothing difficult. our textbook question, we are required to calculate the price as per Walters model. So the formula is there, and we have R and KE both. So basically this is your R, this is your KE, and based on this we had to calculate the price per share and also the payout ratio. Okay. Question number 2A. Okay, here I think that some students might have made some mistakes because of slightly difficult part. See, we are required to calculate the KE using CAPM approach. Okay. So now in this KE using CAPM approach, we are going to take RF plus, what is going to be the formula? RF plus RM minus RF into beta. Okay. Now RF is your risk-free rate. RM minus RF is called as market risk premium. Okay. And when I take market risk premium and multiply that by beta, I already get equity risk premium. Okay. That is called as security risk premium. So basically, they have told you in this question there is equity risk premium. Mind you, this is not market risk premium. This is equity risk premium. Equity risk premium is security risk premium. That is market risk premium multiplied by beta. So in my opinion, we have to only and only take RM minus RF into beta as 9% because security risk premium is always after multiplying the beta component. Okay. If it would have been given market risk premium, then you would have taken whatever is 9% and multiplied that by beta. But if they use the word equity risk premium, it actually means your security risk premium. And that is already after considering multiplication of beta. So in my opinion, this should be 9%. This is 4.5. So this will give you your K. And then they have told you we are required to calculate your cost of convertible debentures by using approximation method. So here we are going to calculate your KD, but convertible value. Again, our textbook question, convertible value, you have to understand it will be redeemed after some, it will be converted into equity shares after some number of years. So here we have to check two important things. Number one, what is going to be the market price of equity share at the time of conversion? And number two, what are the number of equity shares you are going to get? Okay. So the ratio which they have told you is 1:4. Okay. So 4 equity shares for one debenture. And for calculating the market price of an equity share, we had existing market price per share, which is 55. And this market price per share was supposed to grow at 6% per annum. So 55 plus 6% plus 6% plus 6%. And that was to be converted in 6 years. So we have to take it for the period of 6% for 6 years. So in our question, which we had solved in our textbook, it was for 5 years. So what was your conversion value? It was 1 plus whatever is your growth rate we used to take raised to the power number of years, and whatever is the P0 today, this will help you to calculate your P6, that is your conversion value. Okay. So on this basis, if you solve, we'll be getting the conversion value. We have the ratio also available. So we don't have to take into consideration your redemption value here. In the formula, we will take conversion value, which will be derived by whatever is your P6 multiplied by number of equity shares. Okay. You can simply take 55 and add 6% for the period of 6 years as well. That can also give you the conversion value. Okay. Cost of bank term loan with the help of KD, we have to calculate the same. And the market value of 12% bank loan is obviously at par. And we have this as 12%. Just search for if there is any tax rate in the question. Yes. So that will help you to calculate your post-tax. Okay. So on this basis, we can get your KD as well. And we also have to calculate WACC using market value weights. So all these things, weights will be market value, but for your term loan, your book value itself is your market value. And we calculated KD, KP, etc. KD, KE and all. We substitute that, we'll be getting the WACC. Okay. Oh my God. Question number 2B was regarding your working capital operating cycle duration. Such an easy question. Sometimes you keep on doubting the paper and recalculate things to check whether what you have done that is correct or not. So this is operating cycle duration. Again, we have done like 3-4 questions of the same type. We had the number of days available, that is gross duration. From this, if we subtract creditors payment period, we ultimately get what is your operating cycle duration. Okay. And that if we take, it's coming around 96 days, and 360 divided by 96 will give you number of operating cycles and your amount of working capital. But always remember, it should be on cash cost basis. So your annual operating cost is 60 lakhs, from which I'll subtract 4 lakh 80. So I'll be getting cash cost that I will divide by 3.75 times to get the operating cycle, to get what is going to be your operating cycle. Okay, so a working capital required. So this is your amount of working capital required for the company. Question number 3A is regarding your investment decisions. Here, I'll just quickly discuss what is your important part here, NPV method, of course, and PV of CI minus PV of CO. And while calculating PV of CI, we had to prepare the income statement. And in your PV of CO, we are not only investing in your plant, but also we have to invest in your working capital as well. But your working capital is given to you in the form of your debtors and stocks, and there is some creditors also which is going to increase. Okay, so basically 1 lakh 50 plus 2 lakh will be 3 lakh 50 minus 1 lakh, that's going to be 2 lakh 50. So 2 lakh 50 will be your investment in working capital at the end of year 1, which needs to be discounted and brought it to the present value terms. And this 2 lakh 50,000 will be recovered at the end of the 5th year. Okay, so that will be your recovery of working capital. But just make sure that in your questions, I hope you'll have solved by taking PV of CO, whatever is your initial investment, plus your investment in working capital, which we have discounted and we have brought it to the present value terms. So investment in working capital is in the form of your stock, debtors, and your creditors. Okay. We have done a question in which there is stock of materials which were invested at the beginning and that was getting increased at the end of year 1, and then it was getting recovered. Okay. Similar to that, here it is stock, debtors, etc., and we had to calculate it accordingly. Cost of capital, that's your discounting factor, and corporate tax rate is given to you. Depreciation on SLM, wow, such an easy part. We also had to calculate your profitability index along with NPV. I hope that you'll have calculated the same as well. And then in your B part, this was also a textbook question. We had to prepare the balance sheet, and we had current debt, total debt to owner's equity, fixed asset, asset turnover ratio, and inventory turnover ratio. So we had your amount of equity share capital. So we have also solved this in the class. I hope, my dear students, you have found this paper relatively easy, and there was also theory part. And if we have a paper like this, then theory part, I don't know whether you all have even thought about attempting or not. But overall, I'm very happy and satisfied with what the paper is. And towards the end, the climax of ICI is like on a very happy note. So just enjoy now till your results, and wish you all the very best. And if you need any help or if you want to discuss anything, then the number is there on the screen. So you can WhatsApp me, call me, and I'll be there for you. So that's it, my dear students. Bye. Take care. Enjoy.